please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, the market's in a fine spot. At least its heart is in the right place, and there's a reason why I'm saying that. The market's Sensex and Nifty now moved into the green, and the Sensex significantly. I'm on almost a 0.25% higher, so 34,100 almost on the Sensex. It's only the Nifty Bank that is lagging. Well, I spoke about hearts because Morgan Stanley has recently written a note on Narayana Hrudayalaya, the heart specialists. The brokerage is equal weight and believes that the recently added bed capacity will give midterm growth visibility. However, near-term margin pressure is seen until the sites break even. Ashutosh Raghuvanshi, Vice Chairman and Group CEO at Narayana Hrudayalaya, joins us. Mr. Raghuvanshi, good morning, and thank you very much indeed, sir, for joining us. Before I come to your own expansion, which is really the story why we've invited you, just a word on the recent problems in a couple of Delhi hospitals and the general public and government ire against the sector. How do you think this might affect other hospitals which are not involved in this problem?
Yeah, I think there is a whole perception issue which has been plaguing the industry, and I think as any industry starts maturing, there is a kind of regulatory framework which is required. I think healthcare, though, had a lot of regulation, but it wasn't perceived as such. And since the organized sector was so small and the unorganized sector in healthcare is so much larger, that people's experiences have been negative on many occasions. So I think overall the perception of the healthcare industry has been negative, and I think a lot needs to be done on both sides, both on the private sector as well as the public sector. I think the deficiency of the public sector on providing, being able to provide healthcare to people who cannot afford the private sector has led to this situation. So we believe that it has to be a mix of medical education reforms. It has to be a change in the way infrastructure is delivered, the payer concept where the government should be more of a payer rather than a provider. So all these things would have an impact. And also some degree of regulation is required, which is very visible and generates the confidence of the consumer. Okay,
so I just want to persist with this for one more question before coming to your hospital. You know, the problem is not that people were charged more. The problem or the public perception is angered because people were charged wrongly. I mean, 660 syringes for a 6-year-old kid. It is these kinds of facts when they come out that the faith in the sector got eroded. Now, you know, you represent that segment in this sector which is known for you know, almost humane pricing and humane treatment. So therefore, I'm asking you, you know, what can be the regulatory answers?
Yeah, no, see, the individual item bills have to be, there has to be a kind of an MRP on all the products, be it syringes or be the life-saving pharmaceuticals or any implants. And the government has been working in that direction. I think that is important. However, it is also important for us to remember that if you look at the all the publicly listed companies, none of them are making undue profits. So the fact remains that though there may be some items where the profit margins might be extremely high, but on a blended basis, none of the organizations are making undue profits. So I think a representation of the facts in a proper manner has not been done, and I think that has resulted in the erosion of the faith which people had in the system. So I think that needs to be restored, and for that a lot needs to be done, both on the regulatory side as well as industry also needs to sort of do a lot of effort.
Absolutely. We can actually go on with this discussion for a while, but let's get back to the business, you know, covering a bit of what Narayana Hrudayalaya has been doing lately. You've increased your bed capacity. What's the plan as far as top-line growth is concerned? And how long will it take for some of your new sites to break even?
See, the capacity expansion, we have added 2 new hospitals last year, being the Children's Hospital in Mumbai and the Dharamshila Cancer Hospital, which we took over the management from the existing trust in Delhi. The third hospital which we are going to commission pretty soon is in Gurugram, which is about 280 beds. So that's the capacity addition which we are doing. And this, obviously, the new hospitals have their own ramp-up cycle. In the older hospitals which we had sort of established in last 3 to 5 years, the capacity occupancies have started going up, and that has started showing results. However, the new facilities would have some impact on the profitability at a portfolio level.
Okay, so when you say impact on the profitability, what are we looking at? Because you're barely making double-digit margins right now, 10% as of last quarter. Could we head into single digits because of the expansions?
No, not really. We actually made close to about 11% last quarter, and we expect that to rather improve, because there were certain impacts in the previous 2 quarters, as you know, because there was some impact of the demonetization, and then there was some impact of the regulation of prices of stent. Now, since those things are past us, we expect the profitability in the matured hospitals to grow further, and that would result in to a large extent covering up the shortfall which will happen in the newer facilities.
Okay.
So at a blended basis, we will still remain in double digits, I would say.
Okay. If you can just tell us, I mean, I don't know if you answered what Sonia was asking you, how long does it take for a new site to break even? And what is the rate of growth that you can estimate in a matured site?
See, 24 months is the usual period which a hospital takes to mature. And once a hospital is matured, you can still expect a growth of about 8 to 10%, depending on the location and also the configuration of the facility. So we believe that an optimal size of the facility also has to be there. So facilities which are more than 100 beds show a good ramp up even after the maturity phase, because the complexity, payer mix, and such things would increase in ARPOB, and as a result of that, you can see a financial growth.
For, say, a period 3 years down the line, what kind of expansions have you planned?
See, we have been slightly more opportunistic in the kind of growth strategy we have adopted. We have been extremely cautious about how we deploy our capital. We call, as we like to call it, an asset-right strategy, which means a mix of management contracts, suit-to-build properties, and also trust properties, which we could take over possibly, and some asset-heavy projects in between, like what we did in Gurugram, which was a asset-heavy acquisition. So that keeps a balance of overall capital deployed per bed. And that's why we have a kind of almost 1/3 of the capital per bed compared to the industry standard.
Okay. Well, thank you so much for joining us and talking about your company, not just your company, but all the issues that are persistent in the sector. Thanks for that. Well, that's Narayana Hrudayalaya. By the way, the market is seeing a lot of fresh participants in the upside. Walk Hard has spiked up almost about 6% Remember, the management spoke to us just a few weeks ago and told us about how most of the growth, most of the geographies are seeing a decent amount of growth. And they're also going ahead with a lot of the remedial actions with respect to the US FDA, etc. So Walk Hard is one stock that's spiking up right now. But let's talk about the issues that are persistent in the IT sector. Reports suggest that the US Department of Homeland Security is readying a proposal that will make getting H-1B visas more difficult. We have some participants from the sector joining us. Sameer Bendre, the Chief People Officer at Persistent Systems. Sudhin Apte, the CEO and Research Director at Offshore Insights, also joins in. Gentlemen, thanks for taking the time out and speaking to CNBC TV 18. Sudhin, I want to start off with you because, you know, the margins for some of these technology companies could come under severe pressure if they decide to raise the salary levels for some of their on-site staff in order to make that quota, for the H-1B visas. Is that a big concern now?
Yeah, there are both concerns actually. There would be concern on margin because of expected salary levels, especially for the lower pyramid, where currently it's $60,000 to $75,000, which is expected to go roughly to 110 to 130 based on where the exact, the new bill comes in. But however, I think the bigger issue would be the growth also, because as the clients get little nervous about availability of resources because of unpredictability of H-1B issuance. And to make the matter complex, now it's little speculative, but now the reports are suggesting that it's not only about the new H-1B issuance, but it's also for the renewals. So if renewals also get into trouble, then the predictability of the resource on field takes a substantial hit, and then clients have already started thinking about how they mitigate that risk of unavailability of people. So I think it's a sort of it will impact both margin as well as the growth numbers.
Mr. Bendre, good morning and thanks for joining. What we also picked up is that it's possible that the H-4 visas will be stopped altogether, in which case spouses will not be able to work. Is that an additional problem in terms of therefore retaining people offshore?
I don't see H-4 visa too much as an additional problem, because that was very limited to a very small group of people who were already H-1 and who had their green card approved. I think the larger problem is the changes which are likely to happen in the whole H-1B and the difficulties in renewal of the H-1Bs.
So what exactly have you heard in terms of either the number of H-1B visas that will be allotted, or even problems for those that are already allotted?
I don't think we have really heard anything new from what we have been hearing from all the news which has been coming in from the US. The real changes will be, what we are seeing is that the number of what we call requests for evidence has increased. So people need to be better prepared for every visa which they are filing. The renewals are taking longer than they should. I think that's where the real challenges lie. Otherwise, I don't think really anything new or major has come up.
Okay. So
what has come up is something which we have all heard, saying that the rules are going to be tighter, and I think the industry is prepared for that.
Okay, so Mr. Bendre, good morning. So you're saying that as of now, there's no need to make a provision for higher costs and alter your sort of guidances and your margin outlooks?
So at least I can talk for Persistent. I don't think we really were as much concerned about this, because if I look at what we were paying our employees and we continue to pay, I think we are pretty much in the right bracket there. So it should not be a challenge. Yes, the cost will go up. To some extent, the cost of new visa applications will go up. So those challenges will be there. But as an industry, we are geared up for this. So I believe the bigger challenges would come from how to really comes from the ease of doing business. Because if you are not sure of an H1 extension, how the customer will be affected and how you deal with those challenges. That will be the bigger challenge.
So, Sudhin, we heard other IT companies genuinely worried about the uncertainty. What next from the US is what is worrying them. If they know that this is the cost or this is the number of people, they say that at least we can plan for that. How are you assessing the picture? Can things get much tighter? Right. Because on the other hand, the argument is that there are not enough people of similar skills in the US.
Yeah. Let's not get into that philosophical debate about value of offshore resources and resources from companies like Infosys, TCS, Wipro, etc. And are there people available onshore? So that's, I think, a little bit of a now academic discussion, because what's happening is not in line with the real demand or what clients are looking for. So I'm going to park that topic. To your point on uncertainty, absolutely. I think, there are two ways to look at. One way, this is not new. Protectionism, whether it's in UK via TUPE or via H1B and other visa regulations in the United States. We have seen last year or early this year in 2017 in Australia. So protectionism is actually growing everywhere, and because of especially unemployment and economic pressures on those regions. So in a way, one can say that this is nothing unexpected for Indian IT, and they have been preparing. Point one. Point two of the same argument is, the type of work which is coming Indian companies' way, more transformational, more digital, actually calls for a lot more senior people onshore for transformational work, for modernization work, for integration and business process related work. So really, this is not new, and this was expected even from business, profile perspective as well. However, I think what really, worries industry, and I have been talking to several large as well as mid-sized companies, is uncertainty and lack of clarity, and possibly there is a lot of speculation also in terms of how and what exactly it will pan out, and what type of a number of visas will be issued, how long it will take. We are not talking about renewal even 2 months ago. Now we are talking about H1B renewals also, H4 visas. From employer perspective, one can always shrug off saying H4 is not important, and we are not really caring, and it's a small percentage. But the people who are going to US and taking those decisions to shift from India to US, for them that H4 is very important, because if the spouse starts working, the economics work very differently. So when people take the decision, those things are very important. So I think uncertainty is an issue. The reason why industry is little concerned, though it was expected, is basically the transformation of delivery models, from India-centric or India-heavy-centric to more globally distributed, to create centers in United States, to build a sizable base in tens of thousands, especially for large 4-5 companies, actually takes longer time than what one would think of. So really, that sort of a lack of preparedness on onshore basis versus the delays and uncertainty on H1B or in general visa policies is what actually a bigger concern to industry than actually it hitting a particular financials.
Yeah, that point is taken. Sameer, I just wanted you to come in on this discussion, because what is more beneficial cost-wise for a company, raising the salary levels to get a higher share of the H1B quota, or just hiring locally?
No, I think so. It will be about the same, because when you look at, especially if I look at Persistent, where we already have development centers right across the US completely, both from the East Coast, West Coast, as well as in the middle region, and a lot of concentrations in the Bay Area. The salary levels for a person who is acquired locally and a person who is sort of sent from India, the margin levels are not really too much different. What Sukhil spoke about, and I think that's very important, is the uncertainty which we are all seeing. We really don't know what is going to change, how do you plan for it, and especially from an employee perspective. Because if the employee is not sure whether he is going to get an extension or whether he should stay, how he should plan, and ultimately an employee's uncertainty does affect his output and what he can give. So we need to really be worried about what the employee is going to feel, how is he going to manage his own changes suddenly. Because if suddenly someone says your H1 extension is rejected, how does that person do? Because he or she has to come back to India within a week, which is a very, very difficult thing for an individual.
All right. So, gentlemen, thanks a lot for your time today. Yes, there are, of course, that human issue as well. But from business point of view, let's see how this... The market is in the green. It's negotiated some of the early morning weakness, if you want to call it, especially on the Bank Nifty, and is now comfortably in the green. On the Sensex, at least, up almost 100 points. Ashwani Gujral, Mitesh Thakkar back with us. Sandeep Wagle is also with us. Ashwani, does it look like a bit of a trending upward day? 10,542. I think you're watching out for this zone around 10,550.
See, what is interesting for me is that despite negative news on inflation, crude, etc., the Bank Nifty is now trading at the highs of the day. That means that the market's message is that it's not at the moment bothered about crude or FISC, etc. So that way, possibly, Bank Nifty now becomes a buy from an earlier negative situation. So if Bank Nifty also starts to participate, then I think the Nifty can move forward from its kind of ranging action. So that way, the chances of a better uptrending day have increased in the last 15 odd minutes. As far as individual stocks are concerned, Hind Copper is a buy with a stop of 94, target of 106. Aban Offshore is a buy with a stop of 203, target of 217. And Bajaj Finserv is a sell with a stop of 54.20, target of 52.50.
Okay, well, thanks for that, Ashwini. Mitesh, do you have a different strategy on the Nifty now and the Nifty Bank as well stocks?
No, I think Lata, a very similar kind of thing. You know, the Nifty we maintain a long bias, and on the Bank Nifty I would still want to see 25,750 being broken. We are only about 35 points away from that, and post that look at 250 point kind of rally. But two stock calls which I have again from the pharma pack, and I've been highlighting this. You've seen today Sun Pharma do very well, DVs and Star also do very well. I've got now Dr. Reddy's as a buy. Keep the stop at 2350. Look for targets of 2430, and Kedla Healthcare is a buy as well with a stop at 426 for targets of 445.
Oh yes, Divi's in fact has hit a fresh 52-week high, so that one's looking pretty good. What kind of a recovery we've seen in Divi's over the last 6 months from the lows of 540. Now Divi's is back to 1126. But Sandeep Wagle is also with us. Sandeep, any pharma stocks on your list, or you like other stocks today?
Good morning, Sonia. You said it. I have DVs on my list. 1100 stop loss, 1170 target for the day or maybe till tomorrow. And the second call is a buy in a DCB, stop loss of 195, target of 207.
Okay, Ashwini, couple of stock checks. One is Tata Global and the other is Sun TV.
See, Tata Global is heading towards that 320 target that I had. Probably will move up even after that. I think also on Sun TV, that has been showing positive action ever since this 2G verdict, etc. Now that we are trading above 950, I think a fresh leg right up to 1350, 1400 could start on Sun TV.
Okay, well, actually now the mid-cap index is showing the kind of signs it showed yesterday. Up 1/3% after the first hour of trading, or not even the first hour of trading. And actually the Sensex is keeping it company. It's doing as well as the mid-cap, up about 1/3%. Any other pharma stocks, Ashwini? The top 4 gainers are all pharma. Sun, Cipla, Oro. And actually Dr. Reddy's, which has now moved to 5th.
See, Wockhardt is another one which is continuing with its momentum of earlier. So Ajanta Pharma, it's crossed its 200-day moving average, could move up further. But again, this could be a large pullback rally. So, I will be very cautious of thinking that a new bull market is here. Generally, bull market sectors are under-owned. They are not over-owned like pharma is.
Ashwini, a word on Maruti as well. It hit 10,000, then corrected a bit. For you, what would be a good level to re-enter here?
See, I think this is a good enough place to re-enter because it hit 10,000 and did not, or rather cannot correct very substantially. So keep a stop, say around 9,500 and accumulate in the zone. I would think you should see follow through here.
Okay, you should see follow through in Maruti. Thanks, gentlemen, for joining us. Record highs for the market, so there's plenty of money to be made, as our technical experts have just indicated. Mid-caps also flying away as we speak. Before we take a break, since the markets are at record highs, we are back with our favorite annual show, 18 for 18. The CNBC TV 18 Market Wallas are back with 18 stock ideas for the year 2018. Catch SP Tulsian, Prakash Diwan, Amrish Baliga and Mehraboon Irani with their top ideas for your portfolio in the new year. Catch 18 for 18 live from the Bombay Stock Exchange.